The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we only have a little over a month to go for the filing deadline of 2019. What a year it has been, I will tell you.
There's something I saw on Facebook. The Marshmallow Man is next for 2020. Just the crazy stuff, right?
Oh my gosh. And so I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday. And Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. So let's talk about what's going on at the office. I mean, we're doing hundreds of tax returns every week. So in case you're saying, oh, cripe. What do you mean a month ago? July 15th, this is it. I mean, this is the deadline of the extended deadline. On the 15th of July, you got to get those tax returns in, and you got to pay the money you owe, which is a real blessing because it should have been due April the 15th, but they pushed it off to July the 15th because of COVID. And you know, it's interesting. I saw something the other day on Facebook that showed how they always have like calendars with special things per month, and it just showed every catastrophe known to man for 2020. I mean, COVID, and then these horrible riots and everything. It's just been unbelievable. But anyway, we're here to help you save some money. That's what our goal is. I'm Esther Gulius, the Tax Lady from EG Tax. Our phone number here in studio is 803-0930. Star 930 on a cell phone. You can text us at 716-803-0930, and we certainly want to help you. Remember, 4 weeks from now, and our whole thrust today is to give you some last minute tips to help you reduce your tax liability. And remember, you can amend your 2019 return up through 3 years from the due date of the return, which is going to be July the 15th.
Yeah.
But in the meantime, if you hear something that we're telling you before you file that return originally, there's something you might want to do, or you can amend that return you've already filed.
Yeah, and then Esther, we have an account we set up for e-services. So if anybody's missing their transcripts for 16, 17, 18, 19, we can get them emailed to us from the IRS. It's very convenient. I did it twice yesterday. So, if anybody doesn't have their tax documents, we can get those for you.
And remember, it's for all those old years, too, because we still have 17 open, right?
Yep. 17, 18, and 19.
And 19, right. So, we can file your return. We have 5 offices open right now. We have our Southtown office, our East Side office in Williamsville, our North office in Lockport, our corporate headquarters in Tonawanda, and our West Side office. And pretty much we're going to be staffing it some of these offices full-time as the need be. So if you call to make an appointment, we will take care of you.
We will get her done.
All right, so, and again, 803-0930, 803-0930, star 930 on a cell phone. Text us at 716-803-0930. Some things that you might want to do to reduce your tax liability this year is put money into IRAs and SEPs. I just had a gentleman the other day who was doing his return, and he owed some money. And I said, you have your spouse does not work. And even though you are covered under a qualified plan, you can put money into an IRA. And he said, well, that's a great idea. So then the next day he texts me back and he says, can't my name be on this? And I said, no, it has to be in your wife's name. Oh, well, I don't know if I want to do that. Can't my name be on it? No, you can't.
He could be the beneficiary.
I said you can be the beneficiary if you're planning on her death,
Right.
But no, but the thing is, in his tax bracket, putting $5,000 away saved him $1,000. So, it's a great thing to do, and it's a way to build up a pension plan.
Mm-hmm.
Right? Okay, yes, sir.
Oh, no, I was just going to say, you do it every year. It adds up and adds up and adds up, and before you know, you have a nice nest egg.
All right, and the other thing I want to talk about is itemizing. Now, on the federal, it is more difficult to itemize because the standard deduction is fairly high for married filing joint return. But if you're single, many single people can itemize. So we're going to talk about that. But even if you are married and taking a standard deduction on the federal, when you do the New York state return, which also is due in a month from now, you can itemize.
Right.
You
Which
know,
is so crazy to me that if you're married, sorry, not probably going to itemize, which is so bizarre. But if you're single, yeah, quite possibly you're going to itemize.
Because the standard deduction is much lower.
Yep, and the
on
salt.
The federal, but you might be able to itemize on the state because the standard deduction on the state is lower than the federal. And of course, but the big thing on the state of New York, they allow a lot of deductions that the federal doesn't. So if you're somebody that is used to using your car in your job and you as an employee and you can't take it on the federal, you can on New York state. So that's another thing that can save you hundreds of dollars. Why don't we go to the phones before we take a break? We'll talk to Steve. Hey, Steve, how can we help you?
Okay, this is regarding qualified dividends, okay?
Sure.
The way I read the instructions, I don't have to do a Schedule D, but in order to compute my taxes on the qualified dividends, they give you this real long worksheet to work out.
Right, that's correct. The basically that worksheet.
Advantage to do the Schedule D is, I guess, what I mean.
Well, the Schedule D, it's a computation that reduces the liability when you have qualified dividends. So for you not to do it would mean you would overpay your taxes.
Yeah, but they give you. I still did this other worksheet that computes your taxes considering the qualified dividends.
That's correct.
Okay, so there is more advantage for me to do this.
Absolutely. If you're in the 15% bracket or lower, you pay 0% if you do that worksheet.
The worksheet or the Schedule D?
Well, it's a Schedule D worksheet.
Okay, I guess I'm a little confused here. There is a Schedule D and the worksheet. Is the worksheet part of Schedule D?
That's correct.
Because according to what I read, you just do the worksheet.
Right, but the tax liability actually is computed on the Schedule D, and that's when you do your tax computation, you check the box that said it was done on Schedule D. But for you not, how much are we talking about in qualified dividends?
It's about $3,000.
Well, that's, I would assume you could save you at least $300. $300 is a lot of money to me.
But see, I thought when I did the worksheet that I did save some money. I guess I'm a little.
You did save money. It's the Schedule D worksheet.
Right. As long as there
see
is.
if you can help.
Right.
Help me here.
Yeah. As long as there's no stock transactions and it's just the qualified dividends, you can do the Schedule D worksheet. You don't have to do page 1 of the Schedule D where you list the sales and capital gains, but you have to do the Schedule D worksheet, which sounds like the worksheet you've done.
Right. And when you do it by hand, it's a lot of computations.
It is.
Correct.
Right. Absolutely. But it saves you money, and you want to use it.
Oh yeah, and I did use it. And I figured I saved about $300.
That's exactly what I thought. So that's great.
All right. Thank you.
You're very welcome. Thanks, Steve. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. By the way, that's one of the tips I was going to use today. Steve kind of stole my thunder. If you have somebody that has qualified dividends or long-term capital gains, you want to use the Schedule D worksheet. It seems convoluted. It doesn't seem to make any sense. But the bottom line is, if you're in the 15% bracket or lower, you're going to pay 0% in qualified dividends or long-term capital gains. So in his case, $3,000 equated to saving him $300 because he's in the 10% tax bracket, and that's a lot. $300 is a lot of money. You certainly don't want to go out in the street and just throw it out the window. So that's just one example of some of the things that you need to do getting getting ready for 2019, which is going to be due on July the 15th. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back on the other side with your questions.
We are family.
Hey, to us, your family. I'm Esther Golias, the tax lady from EG Tax. We're ready, willing, and able to help you to get that 2019 tax return in and filed by July the 15th. We'll help you with payment programs. We'll help you with offers and compromise. We do multiple years returns, and by the way, they are talking again about another stimulus. So just wanted to keep that in the loop. So let's go back to the phones. We're going to talk to Marie. Hey, Marie. Thanks for waiting.
Oh, hello, Mr. I wanted to ask you, I was driving on Delaware Avenue today in Kenmore, and I saw a storefront that said EG Tax. I was wondering if that office was open.
That office is not open. Our office,
closed
which
April
is 2
15th.
miles away, our corporate office, this time of year because of the COVID thing and the extension, we have only kept like 5 offices open. But our corporate office is only 2 miles away on Colvin Boulevard and Brighton. So if you call if you need tax help, just give our office a call at 632-7886, and we'll have you come on over there and take care of you.
Okay. Could you give me the phone number again?
Sure. 632-7886.
Yeah, and actually somebody's there at the office right now, too.
If you wanted to make an appointment. Okay, Marie?
I got all my numbers together, so I'm ready to make an appointment.
Well, we will take care of you. You sound like you're from New York.
Oh,
Am I right?
sure.
Okay, Marie. Hey, thanks for your call.
I have lived here in Buffalo for 65 years.
I know, but you can't get rid of that New York accent. It's in there.
Still have an accent.
Thanks, Marie.
Have a good weekend.
Bye-bye.
That's funny.
Okay, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we're going to go to, is it Cal?
Seal?
Seal. Hi, Seal. How can we help you?
Hi, I received my stimulus check, and I got $20. It was made out in my name. Now, here's my story. My husband died December 20th, 2018. So, I don't know. I did go to your office in March to have my 2019 taxes, whatever, yes, this past March.
All right, but we're going to tell you what to do because really
Tell me
you're supposed to give back the $1,200 that you received for your deceased husband. You guys want to tell
Yep.
Jill what to do?
Yep, you want to write a letter with
I sent it back.
Yeah.
I got a thing, certified mail, and I got a thing, and it just has a stamp on here. However, nobody cashed the check. That's my problem. What to do now?
You're good. You know, you have to understand that a lot of people are furloughed at the IRS. They're projected to come back July the 15th. So you just hold your horses, and you're going to find out that they're going to cash that check.
Did you send it to Holtzville?
Yes.
Okay, that's the
you'll be
right one. They will cash it.
I know where it is. But, then I got this thing, complete this section on delivery, and it's just stamped that they received it May 19th. But there's no signature. I don't know who the heck,
Well, just relax. Believe me, they're going to cash that check.
They're going to cash that check.
But you did the right thing, so you don't have to worry, Seal.
Okay. All right.
Thank you, sweetie.
Thanks so much.
I'm Esther Golias, the tax lady. The other thing I want to talk about is if you have been getting, they're sending out the stimulus money in the form of debit cards. So make sure that if you're getting a plain white envelope in the mail with a debit card and you think it's a joke, it's really not. Right, guys?
Right. That really sent everybody for a loop because at first they were mailing checks and they were direct depositing, and then about a few weeks ago they decided maybe it would be better to just mail out these debit cards. So it's in a nondescript envelope, and when you open it up, you have to call a number to activate it, and it really is very confusing.
Right. So if you haven't gotten your stimulus, but you think, but that you've gotten this letter that says we sent you the money, and you say I don't remember getting the money, it might have been that you had inadvertently thrown it into the trash can. We can get that direct deposit card reissued, and if you want to give us a call, we'll help you with that. Right?
Yep. And let's not also forget about the PPP changed a week and a half ago.
Yes.
Where before you had 8 weeks from the time to get the money to spend it, now you have 24 weeks, which is great because they realize businesses aren't opened yet.
Right, and you don't have to spend 75% of your PPP money on employees and wages, but you can spend 60% and have it still qualify for the grant that would move from the loan to a grant. And again, if you need help with that, EG Tax will help you. Let's talk about itemizing, though. A lot of people don't think they can itemize, and that's not the case at all, right?
Not the case at all. No.
All right, so let's talk about, first of all, medical expenses are deductible if they exceed 7.5% of your adjusted gross income, and that includes health insurance, prescriptions, hospital, hearing aids, hearing aid batteries, braces, dentists, glasses, medical travels, prosthetic devices, Medicare premiums deducted from your Social Security, nursing care, nursing homes, ambulances, school for special needs, capital improvements that you make to your home to alleviate a medical situation. Those are just some of the medical expenses that are deductible. When you add all of that together, if it exceeds 7.5% of your adjusted gross income, then that's going to be part of your itemized deductions.
Right. And, especially if you're over 65 and you had to have cataract surgery, that's $4,000. That adds that with your Medicare and your extra insurance that you pay for. You're probably over that 7.5% right there.
Right. Or if you're paying many people are paying, they've been furloughed, and what they've done is they picked up COBRA plans at work.
Yeah.
That health insurance. And if you're paying for it yourself, then that is going to be part of your medical expenses. But that'll be, if you're paying it now, it'd be for 2020.
Right. Yep.
So, and then the next category is taxes. Now, this whole amount that I'm going to talk about is limited to $10,000. If you're single, it's $10,000. If you're married filing joint, it's $10,000. This is an example of the marriage penalty.
Correct.
Right? I mean, so obviously, two singles living in the same house would be able to take $10,000 apiece. One married couple is still limited to $10,000.
$5,000, $5,000 and $5,000.
Married filing a joint return would be limited to $10,000.
Right.
So you can see the marriage penalty, but what's deductible is state income taxes paid, sales taxes, property taxes, foreign taxes you pay. Those all, when they're added together, if you're single, are limited to $10,000. If you're married filing a joint return, it's $10,000.
That's right.
Right.
Now, if you're filing married separate, I think we already talked about this, the one gets 5 and the other one gets 5. So if you were single living in the same household, you'd get 10 and 10. And so it's just bewildering.
Right, so that's, again, part of the itemized deductions. The next category would be interest paid for mortgages. So it would be your mortgage interest, your home equity interest, but the home equity you have to be very careful of, right?
Right, it has to be used to put back in your house for capital improvements, a new roof, something like that. Not going on vacation, not paying off
Paying
other
for the
credit
student loans or
cards.
something,
Right.
And so, and then investment interest. So that's another category. So that's part of your itemized deductions. Then something that just happened, casualty losses have to be federally declared disaster areas, and if you found that your business was hurt during some of the protests that went on recently, you want to make sure that you document all of that, because most of these things that are due to riots are not covered by insurance premiums. Now that insurance reimbursements. So as long as that exceeds 10% of your adjusted gross income, then you'd have a possible casualty, but you want to make sure you document it,
Right.
right?
Yep. Just
All right,
like
so-
anything else on the tax return.
But especially with casualty, I
Yep.
think you have to really prove that you had the loss. That's why having an insurance underwriter come out and say, your loss is $100,000, but we're not going to cover it, would be really good. Then the next category is charity. So as long as the money's going to a 501c3, church, charity, then that's deductible. When you give to, what's it called? Like when you go to
GoFundMe.
GoFundMe, that's not deductible.
Yeah, and don't forget if you're a soccer coach, a volunteer soccer coach, or baseball coach, all that travel and money you could spend on traveling with the kids around or buying soccer balls or things like that, you can potentially deduct too.
Right. All right. Let's go to Marion, who's been holding.
We got the news coming up.
Well, you
Yeah, I
want
know.
to
Well,
want to
let-
start to
should
go to
we-
Marion?
No, we don't
Well,
have.
We don't have time?
No.
Okay, so Marion, we'll get you on the other side. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Marion, we'll get you on the other side, and we'll be back on the other side with your questions.
We are family. I've got all
Hey everybody, this is the tax lady from EG Tax. We got a month left to go until we can do that 2019 return. We have Marion who's been holding so patiently. Hi Marion, how can we help you?
Yes, my husband. Well, I got the stimulus check. It was for $2,400. My husband has been currently an inpatient, and he'll be there forever, I guess. Is in a long-term care facility. Now, is he supposed to have gotten that $1,200?
Yeah, if he was living in the year that stimulus money was received, yes, you would get both $1,200 for you and $1,200 for him.
Oh, even though he is a resident of a nursing.
That's correct.
Yep. We don't know if the nursing home is going to require you to turn that over to them.
Is he on Medicaid?
Yes, he is.
So that may be, when you're doing your Medicaid computation, that it's probably going to have to be money that is sent to the state for Medicaid. But that would be something that you would take up with Erie County when you're doing your reconciliation at the end of the year.
Okay.
Okay?
All right. Thank you so much.
Hey, thanks for waiting, Marion. Okay, we got a text, right, Tiff?
Yep, we do. It says, Esther, have the same situation of the last caller regarding receipt of economic relief payment that included $1,200 for her deceased spouse. You were familiar with her situation, but did not clarify what should you do. What do you say in a letter? Do you deposit the check and return only $1,200?
Okay. When you say, hi, IRS, you basically are going to send a letter that says that that I received stimulus money from my deceased spouse in the amount of $1,200. Enclosed, please find this letter, this stimulus money for this taxpayer, the date of his death, his social security number, and you attach your check to it, and you'll send it to Holtzville, right, Chris?
Yep. Holtzville, New York. Brookhaven Refund Inquiry Unit, 5000 Corporate Court, mail stop 547, Holtzville, New York 11742. That's right on our website under the COVID-19 section.
And so she should deposit the check and then mail another
Right,
check
and
to
then write another check, because
Write
they would
another-
probably sent the two together. So this way she'll deposit the money and then send that portion for their spouse.
Yeah.
Correct.
Make the check out to U.S. Treasury and make it for $1,200. Maybe put in the memo line stimulus for deceased spouse, and if
Right.
you want to put a
And
social
the
or
Social
truncate
Security
it.
number. Right.
Yep. And
Because
then
we really don't know exactly what they're going to do once everything comes back, because remember, everybody's been pretty much furloughed till July the 15th on the federal government, and so and they've been kind of they're calling this kind of the season of helping people. They want to be very helpful. So we haven't really heard any bad news. They stopped collections until July the 15th. So July the 15th is upon us. So I think you're going to find that some of the things that you would have gotten from the IRS, you're going to start getting again. And
Right.
collections are one of those. And one of the great things about EG Tax, if you are getting collections, we can help you. Right, Tiff?
Yep, absolutely. If you're getting collections, you don't ignore it. Don't bury your head in the sand. You know, you want to make sure that if you haven't filed your returns, I seem to be a specialist at that. I can get all your final past returns filed, and then we could talk about an offer in compromise or a non-collectible status, or set up a payment plan, or get a home equity, or go to Penn Fed and get a personal loan. Do something. Let's get the monkey off your
really
back.
Good thing is just you're really getting a fresh start. I know Dennis Kitchen talks about bankruptcies being a fresh start, but offers and compromise many times to get that weight of that gigantic liability off of your back and get a fresh start so you have a fresh future.
Yeah, and not to mention the interest and penalties is crazy. I know Chris did a return yesterday for somebody who owed 18 and 19, and so the failure to timely file when you owe is the first month 5, the second month 10, the third month 15, the fourth month 20, all the way up to 25% for failure to timely file when you owe. So you just want to. So what I'm saying is the fees are also very crippling.
25% if you for a whole year is 20 if it's a $10,000 liability is $2,500.
Yep.
Yep.
And then plus there's failure to pay, and there's interest on the whole thing. So it can be really daunting. Going back to itemizing, and I know we have Tony holding, and again, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-803-0930. Going back to itemizing again, there are miscellaneous itemized deductions, such as gambling, which are not limited by 2% of your adjusted gross income, but there are miscellaneous itemized deductions on the federal that aren't deductible, but are deductible on New York State. For instance, employee business expenses, travel that you incur job-related, meals and entertainment that you incur for your job, brokerage fees, tax preparation, educational expenses for your job-related educational expenses, office and home. I mean, there are all kinds of things that aren't deductible on the federal, are deductible on New York State. And if you end up with an extra $10,000 on the state for itemizing, you're saving $500 to $800, which is a big amount of money. So if you're somebody that's just gone ahead and taken the standard deduction on New York State, you might want to look at amending those returns too.
Yep, I know. I just did a 2018 return today for an over-the-road trucker, and he wasn't too happy on his federal return. The state he was, but the federal he wasn't, and that's because they got rid of the per diems.
That's exactly right. So again, there's so many things, and EG Tax wants to help you. When we're doing your return, it's not like we're just doing your return. We're planning for next year, because something we alluded to on one of those breaks on our commercial breaks was that what happened this year was gigantic things, the payroll protection plan, the employee retention credit, the deferral of FICA, there's changes for itemized deductions, the required minimum distribution's been set aside for 2020. There's all kinds of tax law changes that took effect when they passed the CARES Act. And that's part of what so we're not just doing 19, we got 20 as well. So and some people that would have had to take the required minimum distribution out of their IRA this year may not have to, but you might want to. So that's another thing that we would do.
Yep.
Okay, let's go back to the phones. And who do we have?
Tony.
Hey, Tony.
Hey, Esther.
What can we help you with?
Some mixed messages from the state of New York. I'm sole proprietor, self-employed in auto retail, and I don't have any employees. It's just myself. And I filed for the pandemic unemployment assistance, and my first confirmed claim was from the 25th to the 31st of May, and then I continued on the weeks after that. Now I'm starting to reopen now because they give us the authority to reopen.
Right.
So now the state had sent me text messages and emails that they're evaluating my qualification, and then I got a notice that I'm qualified at $182 a week for unemployment benefits, and I should have qualified for the $600 a week for the Fed for the pandemic.
Right.
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 And all of a sudden, as it was processing, as I was keeping tabs on my account, because I opened an account with the state, which I've never done before. I've never collected unemployment in my life because I've always been self-employed. All of a sudden, from being eligible for that money with a maximum of like $40-some hundred, they took that away and now sent me a notice in the mail saying that unemployment insurance monetary benefit determination. They're saying that I don't qualify because you did not work and earn wages in at least 2 calendar quarters, and you were not paid at least $2,600 in wages. And then, because I get it because I'm self-employed.
But did you have a net profit in your business
prior
to the closing of your business?
Yes.
Yes. So, the New York unemployment, you don't qualify, but the federal, you do. And you did go in through the New York State website and click on the pandemic unemployment?
I didn't. I gave them those figures from line 31 of my Schedule C.
Right, but there were two applications, one for New York State and one for the federal. Did you only fill out one application?
And you do it together when you're filling out the one.
Correct.
But you did get the 600, right, Tony?
Pardon?
Have you been getting the 600?
No, I haven't been getting the 600.
It looks like maybe
Have you tried calling back the unemployment? Because I think there was something amuck when you did the application, because you should have been getting the 600.
Right. So why don't you call us? There's no charge, Tony. We will go through with you to look at what you have in New York State, because like Tiffany is saying, you should have applied for the pandemic unemployment, which is the $600. And if you haven't gotten it, they'll go back and retroactively pay you.
It's very easy to make a mistake. I've been on the phone with many people.
Call us 632-7886 on Monday. There's no charge. We'll help you walk through this, okay?
632.
7886.
Thank you very much.
You're very welcome, Tony.
Okay.
Yeah, it sounds like what he did was he filled out the one for the state.
And not the federal.
And not the federal.
Yep. And I know, talking to Tim and Maria and Sue, there's New York State Unemployment has their own email set up through your web portal, their web portal. So they may have emailed him through that without even realizing he has to go back in and do something. So,
right. So, but the thing is, all is not lost. And anybody that hasn't been collecting unemployment, who is self-employed, it is true on New York State you may not qualify, but for the federal, under the Pandemic Unemployment Act, you can get $600 a week. If you were actually in business, you can get up to $600 a week through July the 31st.
right.
And we will help you if you haven't done that. I can think of so many people that have gotten lump sums of money and they can't believe that, that they're entitled to this. But it's brand new. It may never, ever happen again in our lifetime. But
Hopefully
we
not.
certainly want to help you. All right, we're going to take a short break. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Want to talk to you on the other side. We'll take a short break and be back.
We are family. I've got all my
Hey, to us, your family. I'm Esther Golias, the tax lady. From EG Tax, our offices are open. We have a Southtown, Williamsville, Lockport, our corporate headquarters in Tonawanda. Our West Side office is open, and we will extend as much as we have need to be there for you. Just call our corporate headquarters at 632-7886 or go to our website at egtax.com. We certainly want to help you. And, you know, one of the things I love about that We Are Family is we help all kinds of people, and many of the things that we do, there's no dollar signs attached to it. I mean, we just want to help. So if you're somebody that hasn't collected unemployment because you can't navigate the website, if you're somebody paying for your health insurance because you've been furloughed and you've been paying gigantic health insurance bills, we have a department that will help you to get inexpensive health insurance. Many of you that have lost your jobs should you just be going to the New York State of Health instead of paying for COBRA, because you'd get better coverage for less money, sometimes no money. So those are just some of the things we do. But obviously we do taxes too, right?
Yep. There was a person I was doing an offer and compromise for the other day. He was a self-employed person, and the COVID pandemic just shut down, crippled his business. I did 2 offers like that last week. And I said, you don't have health insurance. I marched him over to Tim, and Tim signed him up for Medicaid, and it's really great insurance.
I mean, you can't believe if something bad happened to you financially and you're hanging on to what you were doing before you lost your job and you think you're lucky because you have COBRA, I'm going to tell you, you're in New York State. The New York State of Health, if you are projecting no income next year, you will end up getting Medicaid even though you have assets. And you could get free health insurance or the essential plan, which is $20 a month. I'm going to tell you, if the worst thing you can do is not give us a call, because you're missing out.
Correct.
And we want to help, right?
Yep.
Okay, why don't we go to Ted, who's been holding. Hey, Ted, how can we help you, sir?
Hi, I have kind of a dumb question about an IRA.
Yeah.
I get my income from renting property.
Okay.
Can I still have an IRA for that or not?
No. You have to have earned income in order to have, in order to make a contribution to an IRA. Now, if you have a corporation that's holding the assets and they have hired you as an employee, then and you're getting a W-2 from managing your apartments, then you could do an IRA.
Oh, okay. Thank you.
All right. Thank you, Ted.
Not a dumb question.
Not at all. Okay, we have a text, right, Ted?
We do. It says, stimulus check question. I made over the amount on my 19 tax return, but retired this year. So my financial situation has dramatically changed. Are there any special circumstances to be eligible for the stimulus check?
Yep, and they're going to change. Now, on the 2020 return, they're going to have a COVID virus credit. And basically, they're going to say, did you get the stimulus in 19? And you would say no. How much was your income in 20? If you had qualified income in 20, but you didn't because in 19 you had too much money, you're still going to get the stimulus in 20. So when you file your 20 return, there's going to be a lot of people that are going to have to file in 20 in order to get the money that they didn't get. Mm-hmm. Right?
Yeah, it is true. But at least, so he's going to have to wait a little bit longer, but he
he's
will
gonna
get it.
The money. But he's
Yep.
going to get the money. That's the important thing.
Yeah.
Okay. Before we get to the phones again, 8030930, 8030930, star 930 on a cell phone. Okay. Other things you can do, make sure, like at the first part of the show, we had somebody that talked about using the Schedule D worksheet if they have qualified dividends or if they have long-term capital gains. Make sure you use the Schedule D for your tax computation. It will save you a lot of money. If you haven't been using the Schedule D or the Schedule D worksheet and you had long-term capital gains or qualified dividends, you overpaid your taxes. Plain and simple.
Right. Don't
Right?
do that.
And the state of New York has no benefit, by the way. The federal is
Yeah.
this happens, right?
Yep.
Yep. Let's see. Charitable rollovers are still in existence. So even though you don't have to do an RMD, but you're somebody that likes to do the charitable distribution because you're trying to knock down your IRA balance, you can still roll over up to $100,000 to a qualified charity directly from your IRA to that charity that's
And
still in existence.
Yesterday, Esther, I was with a client and we talked about doing a backdoor IRA when they meet the threshold for being able to contribute to an IRA.
A Roth.
Roth. You want to talk about that, Chris?
Right. So if your income's too high to contribute to a Roth, you can contribute to your traditional. It would be non-deductible, and then you can turn around and roll it
Into a Roth.
and put it right into a Roth.
And you have to do an 8606.
Correct.
Absolutely. So those are things in tax planning that we help people do. Utilizing expenses on depreciable assets for your business. Many people don't know that the depreciation guidelines have substantially been liberalized under President Trump. And so if you're a self-preparer and you're still using old depreciable laws, if you take a look, you're going to find out that they're very liberal, and perhaps the net profit that you have in your 2019 return could be substantially reduced by utilizing some of these accelerated depreciation methods, right?
Yep, definitely.
Let's see. Now that businesses are reopening, make sure you use the employee retention credit. If you're somebody that didn't get PPP and you have employees, use the employee retention credit. It can be up to $5,000 per employee. You got 10 employees, that's $50,000 that you wouldn't pay in taxes, and it's refundable credit. And if you need information, you can call EG Tax. We'll help you with that. Don't forget, mileage is still deductible on a Schedule E and a Schedule A, rental and self-employment, as well as corporate tax returns. If you need money, if you're finding yourself in a pickle, borrow against your 401k if you're still working, as opposed to taking money out. But they can take money out, right?
You can borrow up to $100,000 because of if it's COVID related, and if you pay it back within 3 years, you could avoid the penalty and avoid paying taxes on money that you take out.
Well, actually, you can take it out without borrowing it, and it'll turn into like a loan. So, but I would suggest that if you find yourself short, rather than saying, "Oh, I'm going to take out the whole 100," take out what you need. Don't take out more, because remember, in order for it to make it completely tax-free, you have to pay it back within 3 years.
Okay, we got two
and,
callers.
And that's it. Let me quickly then go back to the phones, and we have Jack. Hey, Jack, how can we help you?
Hi, Esther. Two things. I was told that, first of all, let me qualify. I am a quadriplegic, and I live at home. My wife died in December, and I have home care, all right? It used to be through an agency, and I was in the hospital, and the agency called me and dropped me, all right? And I haven't been able to get through an agency, so I am paying for my nursing and my aides out of pocket.
Okay.
All right, for probably the last 4 or 5 years.
Okay.
And I am on Encompass 65 Medicare. And they tell me that I am not qualified for Medicaid.
Okay.
All right. Now, I heard you say something about, to another caller, about Medicaid and being eligible. And I was just wondering if you would run that.
Well, there's Medicaid through the New York State of Health, which is a form of the health insurance. So it would, what I'd suggest you do, how old are you?
I am 68.
All right, so he would.
I know Tim from some of my clients they've been able to qualify for Medicare and Medicaid. They're called a dual, but you have to be a pretty low income person to be a dual person who has Medicaid and Medicare. Are you a lower income?
That would not be the case, because you're able to afford private duty nursing, right?
But you could have both.
Yeah. See, I am I taught school for 30.
So you have a pension, great pension.
Pension?
So you would not qualify for the Medicaid because you're in for the Medicaid for New York State of Health. It really comes down to the income you have, not your assets. So you could have $1 million in the bank and still qualify for Medicaid for New York State of Health if you had no income, lower
Right.
income. But because of your pension for New York State, you have a lot of taxable income, even though you might not have large assets.
Okay.
Okay.
Another question.
But I will tell you, we have our Medicaid, our health insurance
Navigator.
department, which is absolutely a free service we offer, is you would call Tim Eliason at our corporate headquarters, and he is a genius with helping people out on their health insurance. And if there's a way that he can save you money and get the best insurance, he will help you. The other thing is, I want to caution you: are you giving your home health employees W-2s?
They did.
Because when they work for you, you're supposed to be paying their FICA and issuing them a W-2, and we can talk about that too.
You had
So-
another question, Jack?
Yeah, well, I don't pay. I have never issued them a W.
Yeah, well, maybe we can help you straighten out that too.
But maybe it's
Okay.
a private company you use. Is it a company you use to come in?
No.
That?
Is it a company that you use to do the home care?
It used to be a company.
But not now. No.
Okay.
Okay.
Did you have
But
another
we'll help you
question?
with that too, Jack.
All right.
And so give us a call, 632-7886, and I appreciate your call. Do we have another quick call?
Gina.
Hey, Gina. How can we help you, ma'am?
Hi. So I just real quick. So we bought a property back years ago. We only bought it for like $34,000. We just sold it this week for $75,000.
Good for you.
So do we pay capital gains on the?
Was it rental property?
Yeah.
Yes?
It was rental. Yeah.
How many years did you have it as rental property?
I think it was about 6.
Okay. So, yes, you're going to pay taxes unless you roll that over into another piece of investment property, and that's called a 1031 exchange. So, did you already close on the property?
Yeah, we already closed. We're not.
So, all right, well, yes, it's going to be taxable. It's going to be a $47.97. All the depreciation claimed has to be added in as income. We ran out of time. I'm
Call
Esther
us at the
Galias.
office, Gina.
Yeah, I'm Esther Galias, the tax lady, with Tiffany Fabian, Christopher Fabian. Call EG Tax. We will help you to straighten out whatever mess you got. Until next week, have a great week. God bless you. Thank you. Bye-bye.